if you're wondering why some of the bigger stock names have been crashing lately, you are not alone. In today's video, we're going to dive into what has happened after they have released results, and things are not as alarming as it seems. So stay tuned to the end of the video where I share with you the results of all these big tech companies and dive into what you should do as an investor. Let's go. So before I dive into the news, I'm using this platform called seekingalpha.com. All right. So for US stocks itself, I find this platform very useful because they give us the top stories that are rocking the market right now, and there are a lot of premium analysts or writers inside the platform that would, very real time or in just one day or two come up with the analysis that incorporate all these recent developments, be it the results released, maybe Nvidia is being probed by the antitrust government and things like that. All right. So now let me share with you the different top stories of the past week. So one of it is the Nasdaq losing 2% and the Dow Jones is tumbling because a lot of investors or fund managers, they are thinking that the US economy is not going for a soft landing. It is like crashing very hard because of the late rate cuts. All right. So even though Meta Platforms is doing well, you can see that the other Magnificent Seven stocks are sort of like down big time. All right, down at least 10% and 20% in just the past 1 month. All right. So if we look at Nvidia itself, they have this is quite recent, so they have faced the scrutiny of the U.S. Department of Justice antitrust probe again. All right, because they plan to acquire a startup called Run.ai. So Nvidia has been running into a lot of issues lately. Um, be it the China side of things, or this kind of antitrust issues, and there are more, right? So you can also check out the analysis if you are interested. You can just sign up for a premium account using Seeking Alpha. And if you have enjoyed this video thus far, I will greatly appreciate it if you can help me to smash that like button, subscribe to my channel, and ring the bell so you get notified every time I release another stock analysis video. Alright, so next, Amazon also released their results last night, and you can see that the before the market open is already down 8.5%. Even though their growth beats expectations by the analysts, it's just the soft guidance that analysts or even the investors, the community as a whole, is just so fixated on the future guidance. And if you were to look at this, plus maybe for example Apple or Alphabet, their share prices have come down even though they have performed according to expectations or even top expectations. So in a way, I feel that the whole market is sort of on a profit taking stance, in that they feel that maybe the share price have moved up too much over the past 1 year. You can see that how Apple shares itself skyrocketed from $165 all the way to $230, which is like a good 25 to 30% run up in just a very short period of time. Okay, in just maybe 3 months, 4 months or so. So there's a lot of profit taking in the market itself, and people are turning pessimistic because the results show that there's not a lot of room for them to surprise on the upside anymore. And in fact, if you look at companies with even lower than expectations results, right, their stock prices are crashing. All right. For example, Intel, you can see that the opening, right, they are already down 21% just because their second quarter results missed the expectations, their guidance meets the expectations, and they are laying off 15% of their staff. All right, so their share price, even though you can see a 5 year mark, they have went from 50 something dollars, 40 something dollars since last year, okay, December, all the way to 29, and after market or before market is 22.8. So that is a good 50% haircut since just 7 8 months ago. So that is pretty crazy, a roller coaster ride for US. If you take a look at my Google Finance watch list, the whole list is practically red in color, except meta platforms are Facebook, right? And even the WWE and things like that. So I would feel that there's a broad-based sell-off right now. And personally, what I would do is, because I have this watch list in place, once it reaches a price point that I'm comfortable with, perhaps 10 to 20% down, I will look to dollar cost average. So for example, if I already have a position in a particular stock like Google, and I just recently did a Money FM interview with the host as well. So he actually asked about my opinions on Alphabet. So my take is that Alphabet has a lot of room for growth, be it YouTube or their AI or their Google Cloud. So if I'm you know positive about the long term prospects of a particular stock, and when the market comes crashing, it is a good time for me to value buy, or buy, treat this as an opportunity to add to my position. So what about you? What stocks are you looking at right now? Comment below, and maybe I will do another YouTube video just for the stock itself.